On the morning of January 7th, 1980, the world was still asleep, unaware of what was coming. On the top floor of a Dallas high-rise, you had been awake for hours, waiting. Your coffee had gone cold, but you weren't thinking about coffee. You were thinking about Wall Street. On your desk sat 3 phones, a flickering terminal, and a note you had written to yourself. 4 words written the night before. At the end of years of quiet, obsessive preparation. Outside your window, America was beginning another ordinary Monday. It would not stay ordinary for long, because this was the morning you had chosen to do something the financial world had never seen. You were about to place the biggest physical asset bet in history and lose $1 billion. This is the story of Silver Thursday, the day you broke the COMEX exchange. But to understand what you did that morning, you have to go back years earlier. It was 1971. The government had a dream to completely sever the dollar's tie to gold. That system was called fiat, a completely floating U.S. currency. It locked every American citizen into a shared hallucination of paper value. The idea was simple: growth, stability, and a modern economic future for the country. The establishment joined in. The dollar was pushed as the ultimate safe haven, and it could not fail. On paper, it looks strong, solid, the kind of policy that makes politicians feel very proud. But underneath that confidence, the American economy was quietly falling apart. Inflation was exploding. Purchasing power was collapsing. Businesses were suffocating under rising costs. The dollar wasn't strong. It was being held up artificially, like a dam full of invisible cracks. And while everyone else looked at the dam, you spent a year studying every single crack. Quietly, you began taking your family wealth, billions of dollars, and converting it to physical silver bars. It was a massive short position, a bet that the US dollar would fall, and you were building it in secret. By late 1979, your silver position had reached 100 million ounces. 100 million ounces, and almost nobody in the world knew this trade even existed. By the second week of December, the cracks were beginning to show. Traders across Wall Street were beginning to feel what you had felt years earlier. The dollar was wrong. They were buying silver. Not with your conviction, but they felt it too. The COMEX exchange was fighting back, shorting silver by the millions to defend the system. But every short position they took cost them margin capital. And margin capital is not infinite. Then on January 6th, the evening before, you received a phone call that changed everything. Your chief strategist told you, the exchanges are bleeding. The pressure is accelerating. The strategist said, I think we should double down. You didn't hesitate for even a second. That night, you increased your buying, pushing your position from 50 million to 100 million ounces. 100 million ounces. Betting against the US dollar. The largest physical trade ever placed. By morning, every phone on your desk was ringing. The market could feel something coming. At 7 in the morning, New York time, the silver market opened under immediate and violent pressure. The Wall Street elites pumped billions into margin calls in the very first hour to stop you. The silver price steadied momentarily. For one brief hour, it looked like Wall Street might actually hold. The head of the exchange went on television. They would do whatever it takes to protect the market. Margin limits were raised from standard to maximum. An emergency measure in broad daylight. The market paused. For exactly 1 hour, the world held its breath. Then the buying resumed, and this time it was a flood. By 11 in the morning, the COMEX had lost control. The short sellers were in freefall. In a single day, margin rules were changed again, effectively halting normal trading, the highest margin requirements in modern financial history. And still, the elites kept bleeding. By 2 in the afternoon, the Wall Street firms had spent billions in reserves. They had nothing left. At 7:30 in the evening, the regulators walked out in front of the cameras. Their faces said everything. The COMEX was enacting Silver Rule 7, effective immediately. You were no longer allowed to buy silver. And within minutes, the price began to crash 15%. In the space of one trading day, the entire illusion of the free market had collapsed. You did not cheer. You did not call anyone. You simply sat in your office and waited for the numbers. Your trading team began processing the positions. The calculations were starting to come in. Every ounce of silver bought at $6, pushed to 50, now violently crashing back down to 10. The difference multiplied across 100 million ounces in positions was staggering. The first number that came through was $100 million lost. Then 200, then 500, then the final number arrived, and the room went completely silent. 1 billion lost in a single trading day. The most brutal wealth destruction in financial history. Some estimates later placed the final figure closer to $1.5 billion. The next morning, the financial press gave it a name. They called it Silver Thursday. The day you were humiliated. The day you lost $1 billion. They called you the man who tried to break Wall Street. And the name has never left you. But here is what the headlines never told you. You didn't lose $1 billion in 24 hours. You lost it by being right for years while everyone else was too afraid to act. You understood something fundamental. Markets are not always rational. Governments are not always right. When reality and policy collide, the rulemakers win every single time, without exception. You studied the American economy when it was boring. When there was no crisis, when nobody was watching. You sized your position when the conviction was clear, not when the crowd finally confirmed it. You held a 100 million ounce position while regulators threatened, while journalists called you reckless. And on the day the world was watching, the casino simply shut off the lights. The greatest trades in history are not lost in a day. They are stolen in a day. They are built over months of research, patience, and conviction. Most people are not willing to maintain